Okay, so we'll welcome everybody. Just the first thing, kind of the Christmas arrangements. So webinars this week, webinars next week, and then next Friday is the last day for the one-to-ones and the group sessions. On trading days throughout the Christmas holidays, the daily market updates will go out. If I'm trading, the trade alerts will go out and any updates on trades, but there's absolutely there's no live webinars now. If something happens in the market and I feel I need to have, give you an opportunity to have a conversation with me in a group meeting or something like that, I'll put out a notice on that. It's unlikely, but you just never know. I think it happened about 6 years ago. Actually, I think Christmas Eve, the market fell 10 or 15% or something like that. I can't remember. There was a big washout in the stock market, but it's unlikely to happen. But if there is, in that event, obviously we'll put on an emergency webinar, but all things being equal, from next Friday, then the one-to-ones will stop. So if you want a one-to-one, get it booked in for next week. There, go to the members area and book away. Okay, so we're looking at the charts on the S&P 500. Just Oracle had earnings on last night, okay, and they were worse than expected. So it was pretty interesting. They basically disappointed and the share price dropped 10% after earnings. Now, Oracle is one of the AI plays. So if you think about it, let me show you the share price first of all. I'm looking at Bitcoin here. You can see here just in pre-market, this is where it's going to open up. So yeah, not pretty at all. A bit of a drop there. And as you can see, that kind of rallied big time. After their last earnings and AI and everything else that was going with it. But there was a big disappointment last night. Now the futures at one stage were down 1%, right? And they've recovered quite a bit. So they're starting to discount the issue altogether, to be quite honest with you. So my own view is the market will most likely shrug that off. Having said that, we all know that the kind of the expectations and I suppose the people who are bearish on the market or have a bearish outlook, they keep quoting that the AI trade is overvalued. That's what they keep saying. And depends what camp you're in and that. And Oracle might be the first evidence that, there might be a little bit of overvaluation in it. So if that is the case, you might see some steam come out of the market. So just be aware of that. Personally, myself, I think it's going to create efficiencies. I think the likes of Nvidia, for example, those type of stocks might have an issue. So, we know Nvidia is growing rapidly and their valuation multiples have gone through the roof. And rightly so, given the dominance they had in the chips for AI. But if you look at Google now, for example, they're running their latest version of Gemini on their own chips. And they're considering actually selling out their chips too. So Nvidia might start getting more competition. I spoke about this last year with you, that was the real risk with Nvidia, was that I suppose the market that they have to themselves or have had to themselves might start to shrink a little bit. And all it takes is a little bit, guys. So remember what the market is used to with Nvidia. Look at these earnings reports. Every time you see a green here, that means they've kind of beaten their earnings expectations. So if you look at the surprises there, they've beaten them handsomely every time. So the market expects one thing, they're delivering and beating in every single time. Now, all it takes is one earnings report where they only meet expectations. And then the valuation multiples will start to dry up a little bit in Nvidia. So I think the likes of those stocks, for example, there might be issues with them, right? But I think in generally speaking, the likes of Alphabet here, for example, Google, I'm just telling you now, I use their products, right? I use Gemini and I use other stuff. What's coming and their latest versions of it are off the scale. So I think this is just going to get better, to be quite honest. So that's why, even though our valuations suggest that Google's 10% overvalued right now, the reason we're holding on to the stock is because we actually think that the the revenue and the earnings expectations are going to go up, and therefore so will the valuation multiples too. Just because of what I have experienced myself using their products. And at the same time, we still have other stuff that Google own or Alphabet owns, like Waymo, hasn't even been factored in yet, you know. And I think moving forward, as we move into self-driving cars and everything else, I think you're going to see additional benefits to Alphabet. So I certainly wouldn't be selling that stock. I think there's more in that, and I think the earnings are going to continue to get upgraded with that one, okay? But NVIDIA is a different animal for me. I wouldn't be, if NVIDIA got to 200 again, for example, I'd be saying to people who owned it, maybe offload it. So I just wanted to have a little conversation with you about that, and even if you have any thoughts yourselves on it, just belt away, shoot away, let me know. More than happy to have a chat about it here. So just bringing it back to, I suppose, next steps. I was hoping this sell off, I was going nice one. We're going to get a chance here to start selling puts again on SPY. And the sell off is not great just yet, but that might change throughout the day. It might get worse. So the market went up yesterday 0.7% off the back of the Fed. The Fed cut interest rates, but they indicated that they might pause to see how things go. And the market liked that message. Okay. Stocks took off, but then we had Oracle's earnings and then the future. So there's a bit of a kind of a mishmash going on. My best guess is that the probably grinds higher right into the end of the year. Having said that, the S&P still hasn't created a new high. So the high that was created in October hasn't been taken out yet. So that's the next target there, okay? So with that in mind, I just want to go into, I suppose, the spread betting platform, guys. So for people who are based in the UK and Ireland, and even people outside of that, even people who are in another jurisdiction, I still think that this platform is easier to use. It doesn't have the same analysis tools in it, right? But you can use a dummy account with Interactive Brokers to get the analysis tools. You don't need that. But I still think trading options via this spread betting platform for people in the UK and Ireland from a tax-free perspective, it's kind of a no-brainer. You still need to know the differences. And again, just to remind you, when you sell a put option here, you're not taking assignment. You will never take assignment. This is structured as a bet. So if we sell, for example, the $6,400 or the 6,400 put on the S&P 500, you'll still have about a 90% chance of winning. But what it is here, it's like a bet where you're, let's say we put a $5 on this. So our maximum income on this is 5 times 2180. So if I put a $5 in there, we could make about, let's say, $110 if the S&P 500 stays above 6,400. Now, let's say it fell to 6,300 at expiry, which is 16th of January. We would lose 100 times 5, which is 500, minus the 110 here income. So we would lose 390 for that bet there as such, you know. Now, again, just to remind you, what we would actually do in reality is roll that out and down. So just to show you how I would manage this, I want you to imagine we're in this trade. We've sold this put. And now we're getting antsy and we want to roll it out and down. So what we're doing is going out to February. We're looking at, well, where can we get in $22? What strike will that bring us to in February? And it brings us to, as you can see, nearly 5,800. So I'm already, like, for me, that gives me a lot of confidence putting this trade on. So let's look at the numbers here. SPY at the moment is at 6850, or the S&P 500, right? If it fell all the way to 5,800, we would still be okay in this trade, right? So that would allow SPY to fall 15% from where it is now over the next 6 to 8 weeks, and we would still make a profit. So statistically speaking, there's less than a 1% to 2% chance of that happening. That's more than a 2 standard deviation move. So I'm just trying to show you how we would actually manage it in reality. Okay. And so that's why I'm saying to people who are based in the UK and Ireland, if you stick to that rule, you sell your 6,400. My rule would be I would then put in an alert in my system. So let me show you what I'm talking about here. I would say, okay, if I'm selling this put here, I want to know, let's say when it gets to 6,500, I'm probably going to start rolling out and down rather than waiting. So if I've sold this put, SP500 gets to 6,500, I want to know about it because I don't want to wait. And the reason for that is, guys, if you sell this put option and you don't take any action, and let's say it fell to 6,300, and then you try to roll it out and down, you won't be able to lower the strike as much because of the way the options are priced. You will be snookered on that one. So you're better off taking action quicker. So what I would do then is I would come into my, I'll just show you my dashboard here. I'll go to my US 500. I will set an alert here and I'll go price level 6,500 and I'll just say set alert. So what will happen then is I'll get a ping to my phone if SPY goes to 6,500. So I could write a little message here and go, remember to roll out my short put, for example. And then I set that alert. So if 6,500 gets hit at any stage, I get this alert, roll out my short put. All you do is log in, roll out and down. And you know already you're going to be out to February and down to around 5,800. Does that make sense to everybody? That's okay? All right. So all I'm saying to you is, for me, for example, on an account of this size, if you're allocating 50% of your funds to it, so I have a trade on at the moment, it's taking up 3,000 a margin here. I could probably do double that. So if you look at it here, it's already up, right? So I have a position size of 10. So I might add more to this now. I might sell, let's say, another 10. And this is going to add another 3 grand the margin. So what I'd be saying is 50 to 60% of your account value could be tied up in this by way of margin. And that's just my rule, okay? So I just want to kind of go through the numbers with you on this. That's a significant, sorry, that's the 56,500. That was a way out of the money one we did. We did that as an example with someone. So, but it's a significant return on investment. Even if you did choose this one, yeah? Hello? Did somebody want to ask a question there? No. Okay. So, sorry, I'm probably confusing you here. Let me go to January again. I just want to show you what the returns are. So here's something there, right? We could put 20 on this size of an account. Take in $440 roughly, right? And, you know, on a 12K account, what's that in terms of a return on investment? It's quite substantial. It's 4% tax-free if you're resident in the UK and Ireland, with a 90-something% chance of making that happen. We also know that if it comes under pressure, we can get our break even down to 5,800. You know, so it's not totally foolproof, guys. There's no strategy that is. But in terms of what most people do daily in the stock market, which is buy something with the hope of it going up, that only has a 50% chance. So this is a hell of a lot less risky than buying stocks or even doing the daily currency trades. Okay, I just wanted to go through that with you. And if you have any questions, please jump in there now. Okay. Okay, so just want to kind of just go through a few trades that I did on the daily trades. Oh, sorry, before I move off this, the short-term stock trades, we can see Alaska Airlines has gone very well now for us. So just to reiterate again, when you're investing in companies, we bought in down here, and look what happened. It dropped substantially on us, and we were a long time underwater on it. And I'd said to people to average in down here at about 40. So people who average in, you're doing really well. Your average price is $44, $45, so you're up significantly. But I'm staying in this trade. I think this is going to get to $55, $56. I don't think we're finished with this yet. Okay, we're a little bit overbought here, so we might get some short-term pullback, but I don't think there's any need to be bailing out anytime soon on that. So I just wanted to cover that one off. And then just in terms of the long-term portfolio, am I looking to sell anything? The answer to that is no. Pretty much everything that's in there. JD Wetherspoons actually is coming up close. If that rises about 5% from here, we'll probably get out Wetherspoons, okay? But Alaska is in our long-term one as well. So there's a big difference between the short term and the long term. The short term is stuff to get in and out within a matter of days or weeks. The longer term stuff is, we could be in this for a number of years. I think it's going to go over 60 on the longer term basis, so we will keep it in the longer term portfolio. So I just wanted to clarify the difference there. Okay, onto the short term trading stuff. Just want to go through a few bits and pieces with you on that, and if you have any questions, again, jump in.
Alaska in January.
Yeah. They can move it up or down, but they had a kind of it's actually, here it is there, it's the 22nd. So there was an update there for a lot of airlines recently, Michael, and basically they kind of warned that their earnings will be down because of the government shutdown, and in Alaska's case there was some software issues, but the market actually liked the news and started rallying off the back of it, because then they reiterated some guidance. So the market went, oh, they must be doing okay, you know, so the confidence is back in it. So I think it'll probably reach the higher end in the short term, 58. I won't be hanging around for that. I'll be getting out in the short term trade at 55.
Yeah,
is that okay, Michael? So just moving in, yesterday there was only one kind of trade as such, active trade. It was on gold, and the reason for that is I didn't, obviously with the Federal Reserve announcement yesterday, and there was inflation data, we didn't want to trade the currencies because fairly volatile stuff, you know. So I just want to kind of again go through the methodology on it, right? So the alert, where are we on the 15-minute there? I want to go to gold. Why isn't it on there? There we go. We got an alert kind of yesterday. Now we closed out of it. I just want to reiterate the rationale. So the first thing is, look what I did here. So RSI hits below 30, okay? So obviously if RSI is below 30, it's telling you there's been a recent downtrend. You know, that's what the indicator is telling you. So what we do is we draw our downtrend line, and we also look for next support. And it just so happened when we got our alert, we were right at support here, and it was pretty much support along the way. This is on our 15-minute chart, okay? Now, we're also drawing our downtrend line because we want to make sure that this downtrend is over. You don't want to just jump in just because RSI is below 30. And the reason for that is RSI can stay below 30 for quite some time before it starts rallying, and you might have broken down here and gone to this low. So you wanted some evidence that this has actually stabilized and we're now out of this downtrend. So it was this candle here that you're starting to get your kind of your buy signal as such, okay? Now it was a little bit after that, because it rallied a little bit, we actually bought in and we waited. And then our next trigger to get out is when we make 10 points or when RSI hits 50, whichever comes first. And in our case yesterday, RSI hit 50. So we didn't quite make the 10 points, but we walk away, take the profit off the table. Now, in hindsight, see this move here? This is your Federal Reserve move. See this? That kind of big jump. In hindsight, if we'd have held on longer, we would have made much more. But you know what? That can work in either direction too. So just wanted to explain the rationale for the trade and why we only traded gold yesterday. Now, so far today, would you believe it? We haven't had anything get over 70 yet. We're getting close on the euro dollar. We have no alerts so far today. Nothing. We're possibly close here on the US dollar, Japanese yen. Probably ready to get an alert there. But other than that, when I do get it, I will let you know. but we just haven't quite got it yet. So the purpose of the alerts going out to you folks, and again, the first one is to make you aware that an extreme level has been hit on RSI. So that's like a warning, get interested. The second one is we've actually placed a trade, whether we're right or wrong. And then the third one is we've exited the trade. So the only time in the spread betting account we're holding trades overnight is when we trade options. But we're never holding currencies overnight. We're never holding gold trades overnight. So we're closing them down either for a profit or a loss within that day at some stage. And if it's getting towards the end of the evening, so let's say 9 o'clock at night Irish time, we're getting ready to close it down. We're just looking for our best opportunity to do it. So that's pretty much the rules on that, okay? Just wanted to let you know. Is that okay? Any questions on that?
No.
No. Okay. And then finally, I wanted to have a little chat about oil. So as you can see, oil's making lows again here. If I just bring this into a daily chart. So the short put strategy is starting to look good on oil again. Now, here's the risk with oil. And I just want to remind you, if there is a ceasefire between Russia and the Ukraine, and I hope that there is, I think oil could be under pressure because I think the market will infer that the deal that Russia gets, I would imagine, will involve their oil coming back on the market. So if you think about an additional supply, now some will argue it's already in the market, it's just going to China and India, and that's true. But you just wonder in the short term, could there be a massive amount of volatility? So I do think you need to give yourself a lot of wiggle room here for this to fall further, just in case that event happens. So if I was selling puts on crude oil, it would be at about the 50 strike. So if I come into my Interactive Brokers account here, for example, you can do this, by the way, in IG Index as well, but I'll just show you what it looks like in Interactive Brokers. So we're going to look at the put options on the crude oil futures. And again, just to remind you, there's two dates here. The first date is the expiry for the option. The second date is the expiry for the future. So let's say we went out, I don't know, 30 days, roughly 34 days, and we go out to January the 14th. And if we're coming down to the $50 strike, you're hitting the bid price here, you're taking in $260 in income here. Now, these are big contracts. Just remember that these are 1,000 per pip. So there's a lot, like, you know, they've roughly 50 grand per contract. So just remember that. So look, it might be simpler to do it in IG Index for some people, but this trade has a 96% probability of profit. And the reason for that is we're letting oil fall quite a bit from where it currently is at 57. But I do think you need that type of wiggle room with this, just in case, you know. And I just thought I'd mention that because I was asked about it earlier on today, and I just said I'd mention it for everybody. So that's what I wanted to cover today, guys. Have you any questions for me?
Just one on the dollar.
Yeah.
Would you convert euro to dollar at the moment? The fact that the dollar is weakened.
I don't think it'd be any harm, Michael. I do think, personally myself, I think the only way the Fed start cutting rates again from here is if the US economy weakens, which is a possibility. So just again to explain what's going on in the US economy, you've got like a two-tier system at the minute. The bottom third, let's say, are really struggling, you know, and it's the one area where Donald Trump has lost total control, in my opinion, on his narrative. He's trying to tell those Americans and those citizens that the cost of living is a democratic hoax, right? And they're not buying it. The opinion polls are showing they're not buying the message, that they're feeling the pain. And he's trying to convince them that it's actually not real, but of course it's real. They're feeling it in their paychecks. And that's obviously the lower income earner. The middle to higher income earner are okay because of their 401ks and their investments in the stock market and Bitcoin. So for me, as long as Bitcoin and the stock market hold up, I think the US economy holds up just fine. But if the backside falls out of Bitcoin again and brings a bit of the stocks down, I think you could see a deterioration in the US economy. And it's only in that circumstance, Michael, to answer your question, would I see the dollar weakening a lot further from here?
Yeah.
So I think probably 120 right now would be my area where I go, yeah, definitely be buying dollars here. Do I see any harm in buying it at these levels? Not really, to be honest. We're kind of trading sideways here at the moment. And as I said, the only thing I think that pushes it out of this little sideways trend, I think would be weakening US data, economic data. And the question is now, can you trust the economic data coming out of the US? Because whether we like it or not, he's basically fired people in charge of this data for producing data he didn't like. So now what data is actually real anymore is the question I have. So it depends what narrative. If he wants the Fed cutting rates, he'll want weaker economic data. If he wants to show he's doing a great job in the US economy, it's going to be strong economic data. But the knock-on impact of that is he doesn't get his rate cuts. So for me, I think my best guess here, and I know it's a very long-winded answer, Michael, is I wouldn't have any problem buying dollars here. And I do think your risk is 120, which is about 3%.
Yeah, they're gone to 117.20 there now.
Yeah, I think this is going to migrate when all is said and done, probably back to around 110 again,
Yeah.
over time. But putting a timeline on that is impossible to know,
Okay.
Any other questions, folks?
Steve,
No.
would you do a quick
Yeah.
look at Max?
What's that?
EX.
Baxter?
Yeah.
Is it just technical?
Well, they have fallen so much, and I still think they're a strong enough company. Of course, they can fall more, and it's showing good enough. And I've looked at it in here.
And do you know why it's fallen so much?
Well, I don't really.
No, and the reason I'm asking that question is it seems to be after every earnings report.
Yeah.
There. So like for me, this is the one area after COVID I felt would actually do quite well. Now, some providers have done really well. So if you look at what they do, they provide the medical equipment obviously to hospitals and everything else, right? And due to the backlog of operations after COVID, my view was this would actually do quite well. Now, Baxter didn't perform, but others did really well. So obviously they're not flavored a month for some reason. And we're in a downtrend here. Does it look like it's good value? Absolutely it does. Right here. It looks cheap here, to be honest with you. And the analysts think it 22.31. Our target price is suggesting much higher than that, right? So what we look at, Jerry, now we hop into the financials, right? And I want to go to statistics straight away. And the first thing I'm looking at here is operating margins. It's the first thing I want to know. And straight away, I can see what the problem is here. So look at operating margin, 16%, 16%, 16%, drop to 11, drop to 8, drop to 6. So that would be enough to cause you to be concerned about either the costs have gone up so much or the revenue has come down. So that's a little red flag there straight away that their operating margins are getting reduced. Okay. So now I look at, just to make sure that they're not issuing more shares, they're issuing slightly more shares, but nothing major. So straight away I'm looking at, and as a result of their operating margins coming down, look what happens to price to sales ratio. That comes down too, because investors aren't prepared to pay. If a company has been less efficient over time, they're not going to pay as much in terms of a premium. So the question is now, what about the future? Well, the future looks like earnings per share is set to grow. But then next year, look, 25 to 26. No, not real earnings growth. It's actually negative growth. That's not good. And same with revenue. 1108, there's very little growth there. So it's not a stock I'd be getting excited about, Jerry, in this environment. Based on what I'm looking. Fundamentally speaking, does it look cheap here? Yes, it does. But will investors start buying into it and bid it up? Not based on what the earnings forecast. No.
Yeah, yeah. It's just one to keep on the radar if it
Yeah,
keeps dropping. And
yeah, absolutely.
because it sounded through the years it was a strong enough company. I don't know what has happened to change the
I'd have to look into it. There's something going on, Jerry, that
yeah,
the market doesn't like, you know. Obviously, and operating margins is the key one. Now,
yeah.
every company has suffered from cost increases, you know. They've obviously not been able to pass it on, or their revenues have dropped. But if you look at their revenue here, it's been now it's starting to drop since 2022. It's been dropping off. See that?
I say that, yeah.
Yeah. So it's not a nice picture. So
No.
I can understand why it's undervalued. So in answer to your question, I would wait for this downtrend to be over before I'd even consider this one. So what you could do in your charts, Jerry, if you have it, right? If you have trading view, you could draw this trend line, right?
Yeah.
And then what you can do is right click on the trend line and put an alert on it.
Okay.
And it'll tell you when it's crossing up above it. And it's only then would I be getting maybe we're out of this doldrum with this, but I'd certainly be giving it a bit more time. I'd need more evidence. You know?
Yep.
Okay, guys, just on another thing, we've just got an alert. So this is great because it's real time. So what am I doing here now, right? First things first, I'm going into the IG index. I'm looking at my calendar. What is there any news today that's important from the United States that could impact stuff here? So there's news coming out here at the minute. It's all out. So there's no more news for the rest of the day, right? So that's one thing. Now I'm drawing my trend line, okay? Now there's two trend lines here you could draw. You could draw, that's a trend line in itself, so you'd be waiting quite a while. Or if you're a more active trader, you draw a trend line from here to here. Now I'm going to give it a bit of wiggle room to the right-hand side. And now I'm going to create my alert. And I'm creating an alert here to say, tell me when this crosses above that trend line. So I'm not going anywhere near this as a trade now. Even though RSI is below 30, it's hit a low. I'm not touching this until this trend is over. And then I'll have to reconsider it again. So now I'm moving out of my chart, right? And I'm looking at here. I'm looking at, okay, where's next support? So I look at this little area here. We're right at it. So if this doesn't hold, then I'm kind of going, well, where's next support? Well, look, it's right at the bottom. So I'm thinking here, if this doesn't hold here, we could be going all the way down to this level down here. And that's why I'm saying to you, although we're at support here, I want this to hold, break out of here before I'd consider the long trade on it. And with this one, because the drop is here, I might consider my upside smaller. I might go, I'll only take 5 points profit. You know, so instead of the 10, I might take 5, or RSI gets the 50, whichever comes first. So just wanted to explain that. So remember, guys, I just look, and it's a great example of why you don't jump in and get impatient. Look at this here. This is when we first started getting alerts, let's say yesterday. So remember we said yesterday we're not trading because of the Fed day. So look what happens. If you'd have jumped in there, look what would have happened. You'd be down here before you knew it. Now, do you know what I'm saying to you? Like, this is all based on the Fed's announcement here. So just because RSI is down here doesn't mean it's tradable. Even there, like, you know, there's another alert. And the downtrend never got broken. So you don't trade it. And that's what we're saying here. You wait for this downtrend to be over, and I'd give it some time. I'd give it 3 or 4 bars after it's over to make sure it's really out of the way, and then trade it. And if the trade goes and you miss it, so be it. But you're better off being certain to avoid something like this happening to you. Okay? Okay, your stops will save you, but just wanted to, that's a real live example. It's emerging right now. So you might get an alert later on today to say that I'm going to place that trade. Okay. Any questions on that? No. Okay, guys, I'm going to leave it there. Thanks for tuning in. Next week, next Thursday is the last one of the year. And as per usual, if you have any questions or you want to touch base, just reach out via WhatsApp or the chat function on the website. Okay. Have a good one.
Okay, Stephen.
Thanks a bunch for now.
Take care. Thank you.